Hello, Charlotte. Are you there?
Hi, Professor. I'm here.
Do you have a question for me today?
No, I just wanted to be part of the review.
Okay, very good.
Thank you.
Then I will start.
Okay.
Good afternoon, everybody. This is Professor Hassey speaking live and in color from my office in Claremont, California. And this is our week 7 review and update video for week 7. Today's date is Saturday, July 22nd. And what I'm going to talk about today is I'm going to spend a few minutes reviewing one more time the electrics case, concentrating on the paper part of the case and making sure or answering any questions that any students may have about that. Then I'm going to talk a little bit about the articles that I wanted you to read for this week. Those articles could be used in your paper for the electrics case, and I want to go over that as a second area. And then finally, introduce a video to talk a little bit about mergers and acquisitions. Even though you are not going to be assessed anything in regards to this topic, I want to go over it because it's a good thing to study as a part of corporate finance, a little bit of information and definition of mergers and acquisitions. So that's what we'll be doing today for our video as we head into the last week of our study. You have 2 postings remaining. The case number 3, the financial analysis of your company, is due tomorrow, the 23rd. And then the electrics case due Sunday, the 30th. Just again, I've stated this before, there can be no extensions for the electrics case. I need all postings by Sunday at midnight so I can get the grades and assessment done that week. You can get an extension for the case number 3, financial analyst. That is available should a student desire it. So let's take a look at the paper side of the electrics case. We've been spending an awful lot of time on the spreadsheet analysis and concentrating on how to figure out the warranty and depreciation and all that. But now let's take a look at and assume that we've done our analysis. We've determined the cost of capital. We've determined our depreciation schedule. We've put those into an average analysis of the each individual product. We've done our risk analysis, including scenario and sensitivity analysis. And now we have the results of our review. And now how to apply that to the questions given in the case and the paper format that I'm looking for. So let's bring this up and take a look at it now. Okay, remember this electrics case is part of the assessment of a finance class at the MBA level to determine the student's ability to do 2 things: quantitative analysis and qualitative analysis. And that's been one of the central themes throughout our course these 8 weeks, is your ability to actually calculate data and then your ability to interpret that data into some type of analysis. We've done that in every one of our cases throughout this course. Case number 1 was a quantitative and qualitative analysis of the credit risk of your selected company. Case number 2 was a quantitative review of an investment in assets and determining the capital return on an investment analysis. And case number 3 was both a quantitative and qualitative review of the financial statements for a particular period of time, comparing that to another period of time in that for that company, and also comparing it to an industry average or a fellow competitor in the industry. So that each case has been a subject of your ability as a student, but also as a manager and a critical thinker, is to take a look and calculate data. And what does that data tell you, and explain it in terms of a strategic thinking for a particular company or a particular business plan or whatever. So in the electric case, the same thing holds true. You're preparing a qualitative and quantitative analysis of the difference between two different types of controllers, which is producing the greater return based on the investment and all the variables provided at the cost of money at this given time for this company. But then once you provide that analysis, both of the regular analysis of return and then of certain risk variables of that analysis, what does this tell you, and how do you interpret that information into deciding what is best for this company, the electrics case? And your paper centers around, basically, on page 4, these questions. Now, how you set up your paper in APA format is up to you. Some students like to put it into a memorandum format. Some students like to do a format where you do, again, you have your abstract and then you go through your various points. Either way, it doesn't make any difference to me. All I want to see is you analyzing what's the problem you have. That's an abstract. With a title page, with a table of contents doesn't hurt because you're having a lot of varieties, different sources of information. And then an explanation in whatever order you see fit of explaining these 8 questions in the data that you're able to find and determine, and also any research needed for this type of an analysis. Remember, the bottom line is you're advising the Electrics Incorporated company on whether they should, A, based on their market and current conditions in their business, that they invest in a new product to convert a standard power of a oil or a gasoline fired engine to an electric motor. Is there a market for it? What's the cost of doing this? And do we have a basis of selling this product and making some money in the market? So that's this analysis. So these series of questions are part of the analysis of what you have to find. And then you take this information and explain your answer. Bottom line is you're telling me, one, A, Mr. Hassey, I think electrics this is a viable product alternative, a viable way of going about a new business model for the company. I recommend that either the CTX13 or the MT78 is the product I recommend. Maybe you can even recommend both products, and then the company has to decide what they want to do. After that, then you explain why you're recommending those 2 products or one individual product. Or in some cases, you might not think the return is good enough, and maybe you're recommending the company not do the product, not make the investment in this new product, and maybe consider finding a better way of getting more value out of that investment, or finding different ways of cutting costs, increasing revenue, whatever. This is where the risk analysis plays into fact, especially if you decide not to recommend the product. One of the main reasons for that is the risk involved if something happens. If in the scenario analysis, if you think you're not going to sell 40,500 units, what's the risk? In case of costs, the cost of the controller, the selling price, what happens if those change dramatically? Is there a risk that you could consider viable to not make this investment proper for the company? So these are all things that I'm looking for in the paper. So again, part of its research. Question 1, how much importance should be given to the energy cost situation? Well, this is a little analysis. What's the driving factor behind this change in the company's business model? They believe that with the cost of fuel, the number of cars on the road, the sustainability or the environmental issues, maybe producing a electric version of a package that you can convert your car is a viable alternative based on the energy cost situation currently. I would use Southern California as your basis. And why would you think that is? What's driving that answer? What's the energy cost situation? What's it cost to operate a vehicle in Southern California? What's the price of gasoline? How much would a customer save if they buy this package? That's number one. Number two, getting into what is the company's cost of getting the investment? What is it costing them in capital, be it equity, be it date, be it the weighted average cost of capital? As of today, what's it costing this company to get the $17 million to invest in this kit and be able to produce it for their customers? What's their cost? And explain that. Which of the two? See, many of this you've already done in case number two, but you've never had to explain it. Explain what's the cost of equity. Why is it such? What is the cost of debt? What is the weighted average cost of capital represent to this company electrics in order to make this decision? Then question four is relating to basically your conclusion. Which of the two controllers should be used in the conversion kit if you decide to go ahead with the project, and why? I kind of alleviated that earlier. Which would you recommend this company to produce? Use the appropriate capital budgeting techniques to evaluate the project. So now you might want to put in a table, something where you summarize the two products and the return that you plan on bringing to the company. That's the capital budget techniques. You're trying to show me the return on net present value, the internal rate of return, the profitability index, and the payback in years. That's the capital budget technique. What does it tell you about your recommendation for this project? Then you take a look at the risk involved, especially if you're going to decline the project. But even also if you're going to accept it, are the risks substantial enough not to accept this project, or are the risks minimal in your interpretation? And that risk is the risk of changes in outputs over the life of the project, of the investment, or specific drastic or positive changes in the selling price of the unit and the cost of the controller that powers the switch over from a gasoline powered engine to an electric powered engine. That's the main focus of the product. So what happens if you change those? What happens if the costs differ? How does that affect NPV? And is that a viable way? Is that causes a problem that you may have with that? The risk analysis, both scenario and sensitivity, are all based on that you're going to sell 40,500 units a year. And what's the appropriate NPV return? Now, in the case of selling price, if you say minus 30% in selling price, that means that in order to sell 40,500 units, you have to drop the selling price by 30%. And what does that look like to your return? And onwards. So that's what I'm looking for in the analysis of that risk, how it combines with the overall review of the project, and can you interpret that as a dangerous situation to recommend the product? Would you finally, after all this is done in your interpretation of the data, would you recommend the project to be rejected or accepted? And what is the basics? You should maybe have 1, 2, 3 main points of acceptance or rejection to this project. Couple this with some charts or some explanation of your return numbers or capital budget numbers. That's what I'm looking for in this paper. Just don't put a bunch of writing and points 1 through 8 and think that's going to be a good work. That's C work. That's low B work. I want to see some analysis of incorporating your quantitative data into your qualitative analysis. Incorporate that data into your work. That's what I'm looking for this paper. Anywhere from 5 to 10 pages of written work would be acceptable. Remember, this is a APA format, so I'm looking for a title page, an abstract page. I'm not recommending it, but it makes my review of your work a little bit cleaner. A table of contents, the actual writing, and then a reference or a review of what works did you use to get this data at the end of the paper. So that's what I'm looking at for this work. This work represents 25% of your course grade, so it's a major aspect of your grade and your analysis. So these next 2 weeks of case number 3 and the electrics case represent roughly half of your grade this course. So very important. And again, I stand ready this week. If any of you have wanted me to review your drafts of your spreadsheet or your quantitative analysis, I'd be happy to do that. But I will not review the paper aspect of the case, but I will review any numbers that you have and making sure they are okay. So I'm going to ask the representatives of our class who are here in attendance this afternoon, do you have any questions on the paper that I just outlined for you for this work?
I have no questions.
Thank you, Charlotte.
Likewise, I have no questions also.
Okay, very good. Thank you, Ms. Bird. Okay, if there's no questions, then I'm just going to move on to a couple other topics that I wanted to address today. One, I want to talk briefly about case number 3 because I've had some questions from students in the last couple of days. So I just want to review that again in case there's any open items on that. But I assume if not too many people are on this review session, that maybe not too many people have questions, but maybe they do, and they're just occupied by other events today, which is definitely possible. So that's why I am recording this session. We'll be posting it after to our Blackboard in week number 7 and in our Zoom links file folder. So students who are not here today can get this information over your work of this weekend and into next week. All right, here's the sample format that I have provided for this case. And I just want to go over that and apply it to what you need to do. Now, again, this is just a sample, very crude. If you submit something that looks like this, I'm not going to be very impressed. But again, this is just the basics of the format of what we're looking at in doing this financial statement analysis of the company that you have chosen for this company. So that's why I'm going to walk through this because there have been some questions. Question number 1 is, Mr. Hassey, I'm having a very difficult time finding the industry average for the company that I've selected. What is the industry average? I'm having a difficult time for that. Well, my answer to that is there are a variety of different sources to find the industry average. Matter of fact, if you use the Hoover's database, that's part of our Wilson Library information that's available to you, they have the industry average for many of these numbers for the companies in there. But again, if you cannot find it or locate it, my recommendation is just find one of the competitors for your company and give that information for your competitor. Example, if you have, for example, Target, all right? Well, who's Target's main competitor? I think it's safe to say it's Walmart. So maybe for the averages or an explanation of review of Target, you take a look at Target's financial analytical information in relationship to their largest competitor, Walmart. Perfect. That's fine. So again, if you're having difficult times finding this information, use one of their main competitors. And think about that, because, and if you want to send that by me please feel free. For example, Mr. Hassey, I have Apple computer. I'm having a difficult time figuring out what is their biggest competitor. Well, if you can give me anything from Microsoft, you can give me Samsung, you can give me Facebook, you can give me a wide variety of things because Apple covers so much of the technical industry. That's pretty well works. But if you want to make sure that you have selected a comparable company to compare to, just send me an email and I will let you know that you're on the right track and you don't have to worry about it in selecting that competitor. So that's fine. Clear that through me and I'd be more than happy to do that. Okay. The next area is the agenda or the table of contents or however you want to say it. Remember, this is a PowerPoint presentation. It's not a paper. It's almost like if in the real world you would be submitting this and giving this to a group of people or you'd be giving it online or something. So you have an agenda. What's your agenda for this case number 3? Well, it's a financial statement interpretation. It's a financial analysis, in this case, of Home Depot, based and to indicate their efficiency and potential investor analysis based on this. Is this company being operated efficiently? Are they being operated well? And what is this company a viable alternative or a viable investment in the investment community? And then you explain the 4 sections of your analysis. For example, as indicated, you have 4 sections of financial analysis, and you got to pick one equation from each one of those sections: liquidity, asset management, debt management, and profitability. Now, the dates here are different, but the dates are March 31st, 2023 and March 31st, 2022. Why I picked March is because I didn't think the June 30th data would be available for most of our companies. So that's why I went to the analysis of the quarter ending March 31st. Now, some companies have different quarters, different financial fiscal years. Just go along with the quarter that fits in their fiscal year. So you're going to find 4 equations of these 4 categories and find that information for 2 periods of time. Here's an example of how to show that. For example, in this example, the liquidity ratio, they use the current ratio. And you explain what the current ratio is, and then you find the current ratio for those 2 different periods. There it is right there. And then you indicate a review of that, of what you believe this is compared to the industry average. In this example, the industry average is 2.2. Naturally, their industry average compared to industry is quite different. You comment on that. Here's the asset management review. The asset management indicator here is the total asset turnover. Industry average, this company's calculations for those 2 years, and your commentaries about that. See how it's simple, easy to read, but to the point. Just like you were giving this presentation to people. You don't have a bunch of writing all over the place. You want to show your analysis, show your numbers, and explain it briefly. That's what I'm looking for. Here's the debt management side, which is the debt to asset ratio. What's the relationship of debt to assets for this company? There's the 2 calculations. There's the industry average. Very good. So if you didn't have the industry average for your company, you would just put the number for the current quarter. You don't have to go back for 2 quarters, just the current quarter of what your competitor's debt ratio is. That's all I'm looking for. The profitability is the final area of analysis. Here, that's a return on assets. There's the 2 quarters, and there's the industry average, and there's a commentary about that. See how simple it is, to the point, easy to read, pleasant on the eyes. And then a final analysis of the efficiency and whether this would be a good investment for stock would be on this slide. Has the firm improved from the previous quarter? Is the firm, in your eyes, based on this information, managed efficiently? And as a potential investor, would you buy stock in this company, yay or nay? Again, bullet points, quick to the point, but summarizing your analysis of your company. And then I threw this out because some students like to do this in a nice little review or summary section. And then finally, your references. 10 slides, very easy to read, quick to the point, but they're providing me the data that tells me about the status of your company comparable to the industry and comparable and what they think about, are they becoming a better organization over these 2 quarters? Is it a good investment? And that's what I'm looking for in the analysis. And you can't see my screen. Thank you. Damn it. Hang on. I got to walk through this again then. My fault. Son of a gun. There we go. Okay. Well, you have this file, and you can go back through my sound bite for this interpretation. I think that'll do it justice. Is that okay, Charlotte? Miss Bird, is that okay? You have my explanation in sound, and now you can go to the specific file and follow along. But again, I'll just go back through it. This is a presentation of, just briefly, a presentation about a company, both quantitative and qualitative. The quantitative is taking a look by providing these slides in an agenda format about numbers, efficiency interpretation, and potential stock investment of 4 areas of financial review for the company: liquidity, asset management, and debt management, and profitability. And then what you do is you take those indicators. So I'm looking for 3 numbers. The 2 numbers for the 2 quarters of the company and the industry average or a competitor's numbers for the current quarter, and then quickly review and interpretation of those financial numbers. So there's liquidity, asset management, debt management, profitability. And then a summary or interpretation, 1 slide where you're interpreting the efficiency. Have the numbers improved or have they gone back? What's the trend of those 2 quarters? In your idea, in your interpretation based on this data, is this company being run right? And finally, if you were a potential investor, would you invest in it, yay or nay? And then maybe a review slide, and then your references and sources, and that's what I'm looking for. But notice throughout this, pretty clean and easy to read and easy to interpret. The best thing about this presentation is you don't have to talk. You just have to show me the slides, which is great. I mean, if we were having this in a classroom on campus, you would be giving this presentation to the class. But since this is an online class, naturally we're not doing that, and this is what I'm looking forward to. So that's case number 3. Next, I'd like to go, oops, wrong one. Here we go. Next, I'd like to look at a couple articles that I put into Blackboard this week. And these articles might help you in interpreting and making a decision or a review of your electrics case. I'm not saying that you need to put these in there, but it offers a nice interpretation, a nice way of looking at things. The first article is from the Harvard Business Review of quite a while ago, but the subject is how to implement a new strategy without disrupting your organization. All right. How to take a look at a company like the electrics case, which is looking for a new strategy without driving everybody crazy. And any of you have ever worked for a company, when a new boss comes in or a new way of doing things or a new business model, a lot of people are nervous. A lot of people leave the organization, a lot of unhappy people. So how do you go about strategy? How do you go about change without disrupting the company? This is a great article about how to do that, okay? How to use centralization or decentralization in running your business. How to have more of the strategic information and critical thinking at the top, or have all the managers participate in the strategic decision-making. That might alleviate the stress and the bad feelings. So this is a great article that explains that. So if you're not going to use it in your electrics case, this is a great article just to keep for your own professional career, where you work for a company or industry that is always constantly changing. And what happened over the last few years with the pandemic? How are our companies different now than they were 3 years ago? Drastically different. Some good, some bad. I know at the University of Laverne right now this summer, everybody's finally coming back after all these years from the pandemic and remote work, are now coming back and working on campus. Some people are really stressed about that. Some people are fine with that. The people who are stressed are upset because they really weren't being listened to on why it's good for them to work from home, how they were more efficient, and nobody's listening to that. So this change through the organization is stressing out some people. Some people are leaving. Some people aren't happy. And is the university or is the company better served by this way of changing or doing new things? So this is a great article about that. The second article is called The Balance Scorecard, Measures That Drive Performance. And I'm sure all of you are familiar with the strength SWOT analysis: strength, weaknesses, opportunity, and threats. SWOT analysis. That's one of the basic analytical tools of company management. Well, here's another approach to the SWOT analysis, and it's called the Balance Scorecard. It takes a look at key measurements of the company, but in a little bit different way. And I thought this is an interesting article, and you can even apply this in many respects to the electrics case, of a different way of looking at performance. A different way of looking at even though the return is 10%, maybe that's all we need to make it that is required by our company to keep our investors and to keep everything going smoothly? Or do we need to make 30% return? Performance measures like financial perspective, internal perspective, customer perspective, innovation perspective are a little bit different ways of looking at strategic decision making besides strengths, weaknesses, opportunity, and threats. So that's why I thought this was a great article. Again, you could apply it to the electrics case, but then again, this, just like the previous article, gives you a better interpretation and also may help you in your career or being a manager or a strategic thinker in your organizations. Very important. I've used a balanced scorecard approach in some team analysis, financial analysis, instead of SWOT, and it found that this particular serves my interest better of getting a better perspective of a review of a company's decision and return. So again, two great articles located in week 7, the Balance Scorecard Performance Review and Strategies Without Disrupting Organization. And I think both of these articles can be used outside of this class in addition to inside the class because they offer great perspectives about strategic thinking. Excellent. I know I'm probably boring you by this, but in terms of strategic thinking, which what this class is a lot about, these are two great articles to keep on your flash drive to read on various occasions that happen within your own companies. Now, one last thing I'd like you to be aware of is alternatives to capital decision making. Up to this point in most of our class, and rightly so, is in regards to corporate finance, is to find out, well, first of all, what's our risk of our organization? What is our cost of capital? What is the return that we can get in our market based on investment decisions? What is our financial picture look like, both in the past and looking into the future? And also, what are we looking at as far as developing new models, new business perspectives for organization? But in addition to that, there's other vehicles that you can acquire the same thing. You can merge with another organization. You can be taken over. You can also develop non-capital funding alternatives like leasing of assets instead of purchasing assets. Well, we're going to take a look at a video here that kind of centers on this. And again, I mentioned before that you're not going to be assessed anything about this. This is just a good way to wrap up the class and get you prepared for Business 696, which is your capstone class at the end of your MBA program, where these questions will be part of that analysis. So let's take a look at these videos.
Consolidation of companies through various types of financial transactions. Although they're often used interchangeably, they mean slightly different things. A merger occurs when two companies combine to create one organization. For example, Exxon and Mobil merged in 1999 to form a new company, ExxonMobil. An acquisition, on the other hand, refers to the purchase of one company by another, where the purchasing company obtains majority ownership in the target company. For example, Amazon acquired Whole Foods in 2017, but both companies preserved their names and organizational structures after the deal was finalized. Over the last century, there have been multiple waves of M&A activity in the U.S. The recipe for M&A usually involves cash-heavy companies and low interest rates, allowing companies to more easily pay for deals. Also, when demand for their goods and services is slow, companies might look to grow through M&A rather than organically. Conversely, high interest rates and an unfriendly regulatory environment have the potential to slow down M&A activity. Companies do M&As for a number of reasons: to increase performance, decrease costs, diversify their business, or to grow market share by buying a competitor. Do all mergers and acquisitions work out for the best? Not quite. In 2001, America Online combined with Time Warner in a massive $165 billion merger. The new company, AOL Time Warner, sought to capitalize on the convergence of mass media and the internet. Shortly after the merger, the dot-com bubble burst, causing the company's AOL division to lose significant value. In 2002, the company reported a massive loss of $99 billion. In an acquisition, once plans are made public, the acquiring company's stock price typically declines, while the target company's stock price often rises near the expected deal price. But this isn't always the case. When Amazon agreed to buy Whole Foods for $42 per share, Whole Foods jumped from $33 to $42, gaining more than $9. Amazon's stock also gained, opening $32 higher. As a shareholder, the decision to hold or sell a stock before a deal is final can be tricky. It's always possible that the deal may fall through, likely erasing any gains. However, other companies may jump in and bid a higher price for the target company. This may result in a bidding war and drive the stock's price even higher. So what happens if you own stock in a company being acquired? You could receive cash for your stock, a combination of cash and stock, or another form of compensation. It's important to note that every deal is different. Be sure to check the investor relations page of both companies and contact your broker with any questions. With any trade, there are always inherent risks. Trading companies involved in mergers and acquisitions could result in a substantial profit or a substantial loss in a short time frame. Make sure you do your research and assess risk before making a decision.
Okay, that was a good example, a very quick, short and sweet view of mergers and acquisitions with how they can relate to companies. I think one of the most interesting things about mergers and acquisitions is the collateral damage that they result in. I don't know if any of you have ever experienced being involved in a merger or being acquired. Usually a lot of people lose their jobs. And yes, the company financially usually is better off, but individual people are not better off because of the consolidation of departments, expenses, and the reduction of costs. That is usually a lot of collateral damage when it comes to that. Here's our blackboard, and I want to just go over a couple of things of where we stand right now. One of the things I posted this week was, and again, I urge you not to do it now, but before the end of the class by next Wednesday, the 2nd, is do your course evaluation of this subject. This is something that everything is done anonymously, but it gives us at the University of Laverne a good idea of this course, how it fit into your financial plans, your academic plans, and a nice review of the material. So please take the time before the end of our course to do this evaluation. And here's the link in our Blackboard. Where we are right now, as I indicated earlier, we have 45% of the grades still to be determined for our course. The financial statement analysis case and the electrics case due this coming next week basically the next week. So again, I'm around all this week. If you have questions or need any review of especially the spreadsheet for the assessment case, be more than happy to review that information. I've already done that with a lot of students already, but I will not review the paper. But again, if you have questions through this week, please feel free to ask me. Again, we have the case number 3, which is in a PowerPoint format, and we have the assessment case, which is due. Remember, the key thing for the assessment case is 2 different files. One file, spreadsheet file with these different tabs of your analysis and information, and then your written tab, either PDF or Word doc of your paper and your interpretation of this analysis. Don't forget that. 2 files. And as we head into the final concluding part of our course, to make sure that you're aware of all the different financial alternatives, this is another great video on mergers and acquisitions. That's a very good video to have. So again, as we wind down the course, and I know winding down, easier for me to say, you're basically doing 2 major case studies over the next week. But again, to get things ready, this course is providing you those quantitative and qualitative skills to interpret data and analyze and interpret what is the correct strategy to go by. And I hope that you're seeing that as you're doing the cases, which all of you are, because the grade average in this course has been excellent. You're all doing a fine job. So that concludes our session for this week 7. I'm now going to post this to our Blackboard account so students who are not here can view this. Again, I stand ready to interpret any other information you need during the course of next week. I will have one more video posted next week. So look forward to continue our work, and I am around if you need any assistance. Thanks, everybody, and we'll see you in the next week.